Hello, folks. Brendan Chapman with you today. It's another video from TheoTRADE. It's Monday, February 12th, 2024. And it's been a tear that the market's seen in the market to the upside. Technology's been phenomenal. NVDA, downright crazy. NVIDIA, anticlimactic there. NVIDIA, downright crazy. But are we reaching that terminal velocity we're seeing with regards to technology to the upside? And I say terminal velocity because there's only so far and so fast stocks can run to the upside individually, and including the market generally. They reach that point where the speed can no longer increase. We reach what's called terminal velocity, whereas gravity, it's to the downside. For price, it's to the upside. And are we finally kind of reaching that stage where we're kind of ripe for the reversal? So what goes down must go up, what goes up must come down. And unfortunately, what happens for stocks is that we see the terminal velocity upside, but all of a sudden we need escape velocity to the downside, meaning that the downside can be significantly greater than the upside swings. And so again, that's kind of walking up the stairs, falling out the window type scenario. And again, are we about to see that? Well, guess what? I mean, today we saw technology. Let's just take a look at XLK as a sector. Early on in the session, things were going okay. We kind of dipped, then we rallied again. We tested a new high, and then all of a sudden something broke around 11:19. That's Mountain Time, right? But the notion is we started to break down and fall back. That's Eastern Time, sorry. We started to break down, and you'll see after hours we're seeing kind of extended selling in technology shares. And all of a sudden we started to see stuff like, for example, utilities begin to make a move a little bit earlier in the session as things began to run to the upside and eventually finish near the high of the session. Technology, generally speaking, did well early on and then went limp the rest of the day. Materials continued to churn with the late day sell-off. Staples, we began to see buyers come in at about 8:40 my time on that one. Financials was an area that was strong throughout, then faded late. We created an interesting scenario where we rotated away from technology, maybe for the first time in quite a while. And you'll see that rotation kind of begin around 9 a.m. That's Mountain Time, and began to sell off, rallied again, we're falling back around. A lot of stuff is happening this week. And as a result, the market's pricing in some potential volatility. Now, what's happening this week, you ask? I'm glad you asked. Let's take a look at this. We're going to go to Forex Factory, and you'll see here we got CPI tomorrow. Expectations for a core number stripping out food and energy of 0.3%. The headline number, including for food and energy, is 0.2%. Do we post a surprise there? I saw a headline saying 3-year inflation expectations are the lowest in history. Have we really gone overboard the other direction with a much lowered inflation outlook? It's possible. We're going to start to see the rubber hit the road this week with CPI and with PPI on Friday. We got some retail sales in there, Empire State Manufacturing, again, core retail sales as well. So we got some stuff that's going to give us some indication of the state of the economy and inflation. We also got a bunch of Fed heads speaking this week as well. We got Barkin in there. We've got, I thought there was on here, unemployment Philly Fed manufacturing, a print there. Anyway, so we've got some Fed heads speaking this week as well, some regional Fed reports coming out, stuff that could create some potential for volatility, and the market is reflecting that by its skittishness, and its skittishness is reflected in the VIX. Now, why is the VIX rising today? Well, the VIX normally rises when you see option buying, and specifically put option buying, right? So if we look at, for example, the SPX for today, and we look at today's option statistics, wait for that to load there, but we'll get all the way down to the bottom. We've got today's option statistics. You'll notice that the number, 10 times more calls traded today than the 5-day average, about 7 times more puts traded today than the average. Most of it between the market, but here's the deal though, right? We can look at the change in volatility, like the VIX, for example, and say, well, look, there's buyers today. Right? We can also look at the product depth here, and we're going to look at the SPY. And so I've got 4 series on here. I've got 16 Feb, 15 March, 19 April, and 17 May. Now, normally, right, a normal volatility smile looks like that, where that's the at the money, and we increase, as we move out of the money the same distance, the volatility should be the same. That assumes a bell curve, right? Well, if we look at the volatility curve or smile for 16 Feb, this is the purple line, it definitely looks like a smile. Now, if we look just out of the money here on the call side, you can see the volatility is dropping till about 510 and then starts to rise. That was about 5:15 earlier this morning when I did my session for TheoTRADE. But once you get out here to, let's say, 15 March in the blue line, you'll see the low points out here about 525. You look at 19 April, the low points out here at about 537-ish. You look at 17 May, the low points out here at 560. Now, what's happened is that this has shifted further away. This was earlier in the session, 520, 30, and about 540 for the May timeframe being lower. We see this shift out. What's happening here? We're buying puts and we're selling calls. But for this week, and this week only, no, for this week, we're seeing much more of a volatility smile. And it's not just a smile, it is a grin as we're seeing volatility shoot up on the out of the money puts and the out of the money calls. So the fact that we're pretty balanced here around the at the money strike, maybe approaching 510, again, a little bit of a negative skew to the downside. But the fact these are so steep out here, what we're seeing is something called kurtosis. Kurtosis assumes what? Yes, we have kind of a normal distribution, an equal probability of a large up and a large downside move. However, the tails are fat, meaning what? The potential move in the market is significantly greater than maybe past weeks. Recently, we've seen kind of volatility curves that look like this on Microsoft, for example, where this is the at the money option has the highest volatility. We're buying the at and selling the wings. That's selling a butterfly, expecting some movement outside of the expected range and collecting a small credit. This is the exact opposite, right? We're buying the wings and we're expecting a move. And when you actually look at, let's go back to the trade tab here for the SPX or SPY. Let's look at SPY, I guess, since we're just looking at the chart on that. Scroll down to the bottom. What do you see here? Where is all the activity occurring? Notice on the put side, 49%, 0 to 20 deltas, right? 21 to 40 deltas, 56% on the call side. A lot of out of the money calls being bought, a lot of out of the money puts largely being bought as well. This is driving up average implied volatility that's being reflected in the VIX. Now I'm going to come back to the chart here for the SPY, and I'm going to show you, this is the auto expected move. So for our clients, Don will give a hand-drawn version of this for the SPX, but this just gives us some perspective. Now notice that we went back to the product depth. The low point in the volatility curve is about 510. Again, this was previously shifted out like 515. This has come in a little bit. Okay, so with today's failure to move, the upside pricing has been coming in, expecting, okay, but we're still what? In order for us to get north of 510, we're outside the expected move by about $3. Okay, so that threshold of upside expectation of volatility shifted lower about $5 throughout the day today. But the fact of the matter is, this really starts to kick in when we're above 1 times the expected move. This is Friday's close. This is basically 1 standard deviation plus or minus. To the downside, again, we're seeing a little bit of a shift to the downside. And as we look at, go to the product depth here. Product depth. On the put side, you see him basically immediately running out of the money, right? As soon as you get out of the money here, the volatility is immediately running up, and it really begins to inflect around right now about 492-ish. We start to get really, really steep here. And so again, 492, well, again, that's a little bit below the expected move. We've balanced out a little bit, okay? We've balanced out the shift from being up and the downside being closer. We've pushed the downside from 497 to 493. We've pushed the upside pushed down the upside from 515 to 510. But the point being is that a lot of this interest begins to kick in once we break outside the expected move. Okay? And this can create kind of that gamma effect, both to the upside and to the downside. And what this means is that be careful this week, right? There's some expectation for significant volatility this week. And again, what's going to be the catalyst? Well, again, look no further than potentially looking at the CPI data. Okay. And so again, this is what we're kind of looking at here. Now, as we look at some of what performed today, so we noticed technology drifted. It was utilities that ultimately saw the biggest bounce. Now, notice how utilities have been performing, right? It's been a underperformer for a while now. Yields had previously provided wind at its back, but since about mid-October, so yields are falling. But since mid-December in here, yields have begun to hold up and begun to rise. And again, this creates negative headwinds for utilities, as you'll see that it peaked on December 14th and sold off ever since. So what we're seeing is that we're not seeing exactly liquidation, right? It's not like technology is falling off a cliff. It's not like NVDA is falling off a cliff as well. What we're seeing is there's just rotation, right? Money's not being pulled out of the market. It's just rotating to areas that may provide greater opportunity. Utilities, energy, geopolitical risk out there, materials possibly. Nice little move today near breakout, right? We're now above the expected move for the week. Staples, nice little bounce today off a higher low, looking maybe retesting our highs at 74.50. Financials, boy, financials, especially regional banks today, saw a bit of a boost. And this circles back to something that I mentioned as far as the beginning, right? The idea is, where is the money going? And we look at IWM, what you're seeing here is that what? Small caps are catching a bid. The market's looking for some area of strength or opportunity. And principally, what may be the focus here is value. And the fact is that, look, I mean, regional banks have performed very poorly over the last year relative to the broader market. If everything's honky-dory, which I'm not sure it is, but again, if you're not going to pull your money out of the market, you better find areas of strength that may perform, despite what we saw with New York Community Bank. Let's try this again. Despite what we've seen with regards to New York Community Bank, right, the potential issues there, again, we're going back to this trough. We're bidding up KRE right now, looking for some area that may present an opportunity. And as we look at the potential retracement, yeah, you find support. You might get a 1/3 to 2/3 retracement. Maybe we've got 50.5 to the upside. But the fact of the matter is that a lot of stuff's resetting that has been weak. And the question is, are the weak now strong? Are they healed? Are they better off? We'll have a number of earnings still coming out over the next few weeks. Again, principally NVIDIA next week's a big one. Companies like ARM, for example. I walked through some bullish option activity in ARM on the 8th. We saw this breakout here. There's ways to play the upside, right? Mara had another big move today. Again, we saw big option activity last week on Thursday in Mara. We've seen a nice little move ever since. We're looking at a $30 price target here as Bitcoin. If we look at this, tops 50K. So again, we're seeing big moves in some areas of the market. It's just been hard to kind of find, well, where do I put the money, right? Well, the reality is right now, again, you might stand back a little bit, but look, there is opportunity. I mean, again, if you can find scenarios like Mara where you're seeing rising out of the money call volatility, like for example, here I can buy that and sell that. I'm buying the low vol, selling the high vol. I can go as far to the money as I want. I can reduce my exposure and I can take a swing to the upside with defined risk. Okay, these are the option opportunities in the market right now, are these short squeezes like Mara. But is that it? Well, I went through today a situation of looking for value, okay? And this notion that value can be an area of strength. Sorry, VBR. So Vanguard small caps. Notice they up 1.36%. IWM today was up 1.82%. But if you look at the areas of strength within this value-oriented ETF, and I'm going to show you the product page here for VBR, you'll notice there's a significant weighting for financials, significant weighting for consumer discretionary, industrials. So again, if you're looking for a list of stocks, here you go, right? These are a list of companies that may provide some degree of opportunity in the near term here if the market doesn't sell off. Now let's look at VTV. Is it VTV? Yeah, VTV. This is the large cap value. This is up 0.5%, right? Beating the S&P's performance by almost 0.6% or a little bit over. Again, we look at VTV. This large cap ETF, the areas, right? The 19% of financials, healthcare, industrials. All right, this is the most heavily weighted part of this fund, this value fund. So again, what do you look for? These areas on the bullish side. What are stocks you could look for, right? Here is a number of stocks that could be opportunities to the upside here in the near term. You'll see some energy in here like Chevron, medical stocks, drug stocks like AbbVie, Merck, Procter & Gamble, Johnson & Johnson, Exxon, United Health Group, JP Morgan Chase, even a technology name in Broadcom. Then, of course, you got the Buffett stock, Berkshire Hathaway. So the idea is that there's opportunities potentially in this value space. But remember, the VIX right now, given what it's pricing in terms of volatility, this is a time to be careful, right? If you're going to take risk on, take it on a limited basis. Because look, if inflation starts to come out on the negative side, right, higher inflation than expected, we start to see a breakout in the 10-year Treasury yield. This may be the final nail that's going to spoil the party in the S&P 500, and maybe we start to get that correction that's been priced in for a while. If we look at skew as of Friday, this will come out, in about an hour here, but as of Friday, 156 ticking up from 150. Skew is high. It tells you you're going to see a high frequency of small up days, but the crash risk is increasing. So yes, we're reaching that terminal velocity as the daily moves in the S&P contract based on that skewed outlook, right? We're starting to build the case for the exit velocity, in this case to the downside as we run towards Earth for the S&P 500. But again, doesn't mean we can't stay bullish longer, and you can remain solvent on the bearish side. But if we're looking for areas to be strong on, smaller cap names, value-oriented names in particular, and if you're looking to get bearish, again, a QQQ consideration here may not necessarily be a bad thing. In fact, when you get in, you look at, for example, let's just take a market expiration here. The skew is favoring downside put spreads, right? So for example, rising volatility as you move out of the money. If you want to make a play for this week and this week alone, for the most part, you could look out to February. This gives you through next week and next week. And you could look at a downside put spread. Again, the volatility skew is rising. It makes this option cheaper on a volatility basis than that option. And again, you could try to take a downside spread here, $5 wide. Let's just start with a 40 delta, 432, 427. Buy deep and wide. I'll go 4 strike and widen it out here. But 432, 427. That costs you $1.48. Risk $1.48 to make $3.50. You can even take a bigger downside bet. Again, you can buy the lower vol, sell the higher vol. You can construct whatever you want here, right? 420 would not be unreasonable to the downside. Could you buy a 425 and sell a 420 here? Might cost you about 70 cents to do so, right? 20 delta, 40% chance of touching 424. Just get a little bit in the money, you break even on it. So again, low probability trade, but if we start to break away, 420 seems like a pretty reasonable area to touch or break through in this case. So the idea is, again, just playing off the volatility. This is a day to be cautious, right? If you're looking to get long, something like XLU or something like VTV, for example, or a VBR in the small cap space, you could look at financials generally. These are your large cap space. This is your smaller cap regional bank space. But again, is this where you want to go with all the news that's been out the last couple of weeks? Again, probably keep it safe, or ideally, maybe you just take that downside, low probability swing on the Qs. And if you have a long stock portfolio, this might kick in as things begin to sell. Well, folks, wrap it up there. We'll catch you back next week on the video. You have a great one. Thank you.